I'm financial reporter Alan Mendelson. Now I'd like you to meet certified financial planner Brian Gilder, who has some thoughts on the economy and the stimulus plan. The stimulus plan. Confusing? Not working? What do you think?
I think we're out of touch with the real world. I think that if we're going to have a stimulus package, we need the stimulus package to work for 2009. We need it today, right now. We hear on Wall Street and we hear in Washington, we are in dire need of something to be done. We need these bills passed. And I'm thinking to myself, if we're in dire need, why are we worried about aspects that can happen in 2010, 2011? We need money today. We need to stimulate the economy today. I have two solutions.
You have two solutions to get the aid into people's pockets right now. What are they?
I would cut the payroll taxes for 2009 because you would have money in people's pocket immediately and they can spend that money into the economy and stimulate the economy. I would also impose a declining capital gains schedule. I call it the Gilder plan, where if you could invest up to $10,000 into the financial markets, stocks, bonds, mutual funds, and as long as you held those investments for 5 years or more, you would pay zero capital gains tax. If you needed the money early, after 1 year, you'd pay 20% capital gains. 2 years, maybe 15%. But it's a way right now to help stimulate the economy and invest for the long term, which I think does two good things. First, we're stimulating the economy by people investing into corporate America, and people are starting to save and thinking long term, which they should be anyway. Day trading is ridiculous. People need to think long term, and I think this is a way to get people to start investing money for the long term.
Based on what's happening today, where's the number one place to put your money?
Cash.
That means bank accounts.
Banks, highest CD rates.
CD rates.
And I think from the interest you're earning, that money could be invested into the market and dollar cost average your money into the financial markets.
You know, but a lot of people don't have that much money. If they have $10,000 or $20,000, that should just be cash.
Well, if they don't have enough money to cover their expenses, they don't have at least 6 to 9 months of liquid cash available to cover expenses, they shouldn't have any money into the stock market because who knows, you can get laid off. I think you got to play extremely tight defense right now and have cash built up because we don't know what's going to happen. Heck, in Washington, they don't know what's going on because we have so much uncertainty and we're having all these volatile markets. I mean, we come out with a stimulus package and the market keeps going down.
Stock market looks low, it looks cheap. Would you be buying stocks now?
Not until there's some certainty. We don't have a clear picture of what's going to be happening in the future. And when you have uncertainty in the financial markets, you're in for a very volatile ride.
Some people will argue that stocks are now in the basement, but we don't know if there's a sub-basement, do we?
No, we don't know. I mean, we could go down below 8,000. We could go below 7,000. We don't know. If we knew what was going to happen, we wouldn't be here right now. We would be sitting pretty somewhere. But we don't know what's going to happen. But I think we need to be smart and we need to play some defense right now.
So number one place for defense is cash in bank accounts.
Cash in secured bank accounts, FDIC insured, and money markets that are FDIC insured. I think you have to be very, very cautious because we don't know what's going to happen in the future. And also many people, we don't know what's going to happen with people's jobs.
If you happen to have enough cash around and you happen to have a little extra money, then do you go into the stock market?
I would do a dollar cost averaging method.
In other words, you would buy stocks slowly.
I would buy stocks slowly. It would depend on what's your time frame. If you think you're going to need the money in a couple of years, I wouldn't even touch the stock market. I would not touch the stock market unless you had at least a 10-year time horizon, because I think we're in a real mess right now.
So if you did want to go into the stock market, if you don't have a 10-year time horizon, in other words, 10 years to leave the money in the stock market, don't touch the stock market.
No, I wouldn't touch the stock market. I would leave it in cash. I would still, though, contribute to your 401k plan because that could be free money that you're contributing. And also, I would contribute to your IRAs or Roth IRAs.
Because there are tax benefits attached.
Yeah, there's tax benefits. I mean, contributing to a 401k plan, if they still match your company, that's free money. That's a great rate of return.
Right, your company may match your contribution or give you 50% of what you contribute. That's profit in your pocket.
That's the best investment.
But other than that, additional investing in the stock market on your own, unless you have that 10-year time horizon, don't do it.
I wouldn't do it.
Because the risk is just too high right now.
The risk, I think, is too high, and I think many people are going to see more and more volatility, and I think people are going to panic, and then they'll sell at the worst possible time. You just don't want to panic. If you're going to invest in the market, do not panic, and make sure you have that 10-year time horizon.
For more information, call Certified Financial Planner Brian Gilder at 310-804-3767. Again, 310-804-3767. I'm Alan Mendelson reporting.